Hi, I am Anna. I come from www.ntvforex.com. Houston, we have a problem. http ntvforex.com news ID EC76D6 7/23/2025 08:54 am. The US appeared to ratchet up its tit-for-tat proxy Cold War with China overnight, unexpectedly ordering the closure of China's Houston consulate. The decision wrong-footed equity markets, but they quickly regained their poise after Tesla's better-than-expected results. Currency markets completely ignored the announcement, with the US dollar sell-off continuing, albeit at a less frenzied pace from the previous session. Only this morning has some fallout been noticed, with both CNY and CNH weakening after a stronger USD-CNY fix. Overall, the announcement is not a game-changer in the medium to longer term. Financial markets have for some time been building up herd immunity to constant quarrels of the two schoolyard bullies. Asia's data today has been a mixed bag. Australian PMIs showed a continuing improvement, especially services, as much of the country emerges from pandemic lockdowns. South Korean GDP disappointed though, falling an above expected 3.30% QoQ. Forecasts had been for a 2.50% fall, and so, in the scale of surprises, the GDP highlights the economic challenges that COVID-19 has presented. It does not change the overall view. Both the South Korean government and the Bank of Korea are likely to stand pat from here, allowing the extra budgets, rate easings and events elsewhere to work their way through the system. Singapore's inflation data is released this morning at 1,130 SGT. Inflation is expected to remain negative at 0.55% YoY. The number is a known unknown though, with the city-state's economy already slowing before COVID-19 arrived. The ensuing circuit breaker lockdowns have held economic activity and local consumption below the waterline. Singapore's inflation will remain non-existent for the rest of the year. Most attention will be focused this evening on the weekly U.S. initial and continuing jobless claims. Initial jobless claims remain stubbornly stuck around 1.3 million, with continuing claims around 17 million. Another roughly 14 million individuals that aren't eligible for state benefits remain on support from the CARES Act. A spike in jobless claims this evening will give new urgency to congressional negotiations to renew the program, which expires this week. Elections are not far away, and markets have not really priced in the second dip in activity as the pandemic rages across the U.S. A weak number has the potential to take the froth of U.S. stock markets temporarily as reality bites. Asia looks set to consolidate today, with Japan on holiday today and tomorrow, reducing volumes and liquidity. In the bigger picture, short of a severe geopolitical escalation between the U.S. and China, or an end-of-days jobless print this evening, the underlying buy everything globally recovery trade looks set to remain on course for the rest of the week. Asian shares edge lower on US-China concerns. Asian stock markets are a mixed bag today. Northern Asian markets have edged lower on US-China relations. Southeast Asian markets appear to be consolidating, with trade-centric Australian indices flat. U.S. stock markets had a modestly positive day after dropping initially post the Houston consulate announcement by the U.S. government. However, Tesla posted an above-expected profit for Q2, prompting an immediate 10% rally in their share price and lifting Wall Street from its gloom. The S&P 500 finished 0.58% higher, the Nasdaq rose 0.24%, and the Dow Jones rose 0.62%. In Asia, China's mainland exchanges have retreated on geopolitical concerns this morning. The Shanghai Composite has fallen 1.80%, and the CSI 300 is down 1.60%. Hong Kong though is unchanged on the day as IPO fever maintains a positive tempo. Disappointing GDP sees the Kospi falling 1.0% this morning. Across Southeast Asia, Singapore is unchanged, with Kuala Lumpur up 0.40% and Jakarta up 0.80%. Australia's ASX 200 and all ordinaries are almost unchanged, down 0.10%. Overall, Stocks appear to be in consolidation mode today, and we expect more of the same once Europe arrives. Key event risks in the short term will be U.S. jobless data and the level of Chinese retaliation over its Houston consulate closure. U.S. dollar sell-off continues at a reduced pace. The rotation out of U.S. dollar continued overnight, albeit at a less frenzied pace than the day before. Currency markets almost entirely ignoring the U.S. intention to close China's Houston consulate. The U.S. dollar index fell 0.20% to 94.95 and has eased slightly again in Asia, to 94.92. The mid-March lows in the dollar index at 94.65 remain the initial technical target. Euro-USD again outperformed overnight. The euro rose to 1.1600, before retreating to 1.1570, recording a 0.70% gain for the session. The single currency seems likely to retest 1.1600 in the near term, on its way to 1.1800 in the coming week. GBP/USD closed above its 200-day moving average DMA at 1.2698 overnight, finishing unchanged at 1.2735, with 1.2800 its initial target. The trade-centric Australian dollar also consolidated its recent gains, rising slightly to 0.7150. With Japan away, currency trading has been muted in Asia today, with most major and regional currencies almost unchanged from their New York closes. Although we note the regional Asian currencies have shown no nerves over US-China tensions, a positive sign that their rally will continue. The one exception has been onshore and offshore Chinese yuan, both of which have retreated today on the Houston consulate situation. The PBOC set a much higher USD-CNY fix at 6.9921 this morning, partially reflecting US dollar weakness in the basket, but also sending a subtle message to China hawks in Washington. Both USD-CNY and USD-CNH rose from 6.9800 support to 7.0000 overnight and advanced to 7.0035 and 7.0055 respectively this morning. Resistance lies at 7.0250 and UN's next move will be dictated by when and by how China retaliates. Overall, the rotation out of US dollar remains on track, although the Japan holiday has muted activity in the region. Markets are assigning a higher weight to the EU stimulus package and vaccine progress, rather than geopolitics. Oil consolidates gains. Oil shrugged off a surprise rise in U.S. crude and distillate inventories overnight to consolidate gains above key recent resistance levels. Although both contracts edged only moderately higher in overnight trading, the fact that oil could weather the U.S. crude inventory surprise is a positive indicator. Brent crude rose, and WTI both finished 0.20% higher at $44.25 and $42.05 a barrel respectively. More importantly, Brent crude finished above previous resistance at $44 a barrel, and WTI above $42 a barrel. Trading is subdued in Asia with both contracts edging another 20 cents higher this morning. Geopolitical concerns have been set aside with energy markets sensing that a new US-China trade war, derailing the global recovery, an unlikely outcome. Unless China surprises, we expect the rally to restart in European hours. Brent crude's medium-term target remains $48 a barrel, and WTI's at $44 a barrel, their respective 200 DMAs. Gold and silver close at their session highs. The rally in gold and silver continued with full force overnight. Gold closed near its highs, finishing 1.65% higher at $1,872 an ounce. Silver finished the session 8.10% higher, closing at $23 an ounce. Precious metals boosted by a weaker US dollar, lower US yields, and systematic and safe haven flows. Silver has seen some profit taking on thin V0 alums this morning, falling 1.55% to $22.6775 an ounce. Its high overnight forms initial resistance, with only a loss of $21 an ounce calling the rally into doubt. Gold is unchanged with support at $1,840 an ounce, somewhat distant after the volatility of overnight trading. Resistance is at the overnight high of $1,877 an ounce. After that, the all-time high at $1,920 an ounce is the next target. A break of $1,920 will almost certainly spur renewed systematic, and options and stop-loss related buying. That said, we would almost certainly expect barrier option related selling initially ahead of $1,920. Subscribe our channel to receive the news as soon as possible. Thank you for watching.